Hello friends, welcome to another session of ACE Accounting Exam Series. We are currently dealing with the topic of dissolution of partnership firm. This is the second part of the dissolution of partnership firm topic. The first part we have already learned the preparation of realization account. So if you have not already watched that video, please do watch that video because we will be only dealing with the preparation of partners capital account and bank account in this part, and we'll be using the amounts that we have already used in the realization account. The realization loss that we got is going to get transferred into the capital account that we are going to prepare here. So for your better understanding, it is necessary that you watch the part 1 too. So now let's start. Now we have this particular question that we had dealt with in part 1 of Srijan Raman Manan, and the profit sharing ratio was 2:2:1. This was a balance sheet. From here we prepared the realization account. We had already dealt with these items were credited to realization account. These items were debited to realization account. So that is to be ignored. Now for the preparation of capital account, what is relevant, that I will highlight. We are going to be taking the opening balance of the capital of the partners here. You find Srijan and Raman have credit balance, so these two amounts will come on the credit side of the capital account of the partners, whereas Manan here has a capital balance on the asset side of the balance sheet. So it's a debit balance, so it would come on the debit side of partners capital account. Other than that, the amount of the profit and loss account, which is there on the asset side, this 80,000 represents accumulated losses. So this has to be transferred to the debit side of the partner's capital account. It will be distributed in the profit sharing ratio of 2:2:1 on the debit side of the partner's capital account. And this bank account balance would be taken to the bank account, which also we'll be preparing today in this particular session. So this is how the amounts are going to go into a capital account and into the bank account. Now from here we have already taken this commission in the realization account on the debit side. The other effect is Srijan's capital account has to be credited with the amount of commission that is payable to him. The asset realized values, the investment amount realized, all these would go through the bank account. The amount paid here, 75,000 towards the outstanding repairable and the contingent liability in respect of bills receivable, both of this also would go into the bank account. Here this goes on the debit side of the bank account because these are the amounts which have been received, whereas the 7,500 and 15,000 would go on the credit side of the bank account because it is a payment being made. And this amount is to be ignored because it was responsible of Srijan and paid by Srijan, not to be recorded in the books. So let's start. We had prepared the realization account in this manner. And from here, what is the amount that is going to go through? That we are going to identify and see. Directly you have created this particular bank account on the payment side. You would have, this would come into the bank account. On the credit side of the bank account, 1,72,500, that is a payment made towards outside liabilities and the contingent liability and the repair bill. Everything together goes on the payment side of the bank account, that is credit side, whereas the total on the receipt side of the bank account, that is on the debit side, would be the receipts of 2,31,500, whereas the amount that we have here in respect of the capital account, as I told, the commission would go on the credit side and the losses would go on the debit side of the partner's capital account. So now let's start. Now we will start putting in the details of the capital account. As you remember, first we start with the balance sheet. There was balance of the capital on the liability side, which is written like this: by balance brought down. The two of the partners, Srijan and Raman, had a balance on the liability side of 2 lakh and 1,50,000, But for Manan, we found that the balance was on the asset side. So we write it on the debit side of his capital account as to balance brought down an amount of 10,000. Other than that, there was his profit and loss account balance on the asset side of the balance sheet of 80,000 to be split. So rupees 80,000 to be split in this profit sharing ratio of 2:1. So that 80,000 divided by 5 comes to 16,000, and these would be double. So 32,000 to Srijan, 32,000 to Raman, and 16,000 to Srijan. The accumulated losses distributed in the profit sharing ratio on the debit side of the capital account. Other than that, we had the amount of commission given to Srijan. So that comes as by realization account, commission being given. We have calculated that amount as 11,575 from the realization account, and then there was a loss on realization. So the loss on realization comes on the debit side. So we write to realization account, loss on realization. The amount was 81,030 and it was 40,515. So these are the amounts that come into the partner's capital account. Then we are supposed to just close the partner's capital account. Let's see, the balancing amount whatever we get would be to bank or by bank. So here the credit side total is 2,11,575. Write it here, 2,11,575 minus 32,000 minus 81,030 leaves us with 5, 4, 5 here. 3 means 8 and 9. So we have a balance here. This would be represented as a payment being made. This is the final payment being made to Srijan. Similarly for Raman, we find again the credit side total is 1,50,000, which is more. We write it on the debit side. Find the difference. It comes to 36,970 is the amount paid to Raman. But when it comes to Manan, he had a debit balance. So you find that he has a total of 6515. So 66515, a debit balance means he is supposed to bring in that amount. So this is going to be the amount that is going to be received, 66,515. So from the balance sheet, the bank balance, from the realization account, the amount received, from the relation of assets, and the payments made from the realization account towards the liabilities, and finally these final payments and the amount received will be the part that would complete our bank account. With this, our partner's capital account is complete. Now let's prepare the bank account. As you know, we are going to start it with the balance brought down. Refer to the balance sheet. There was an opening balance of 10,000 on the asset side. Then go to your realization account. There you have the assets realized amount, the total of it on the credit side. So that we would write it here on the debit side. The amount was 2,31,500. And then we had the payments made towards the liabilities on the debit side of the realization account. This is for the liabilities paid. The total was amounting to 1,72,500. Now other than that, now from the capital account we are going to take the amounts of the final payment. So what I was talking to about was these amounts, and this amount which has to come. So this is the amount brought in by Manan. So it is going to come here to Manan's capital account, 66,515, and for the other two they are going to be given paid back by Srijan's capital account and by Raman's capital account. The amount was 98,545 and 36,970. When you total this up, it should tally. That tells us that you have done all the adjustments correctly. There won't be any balance left. So this bank account tallies at 3,08,050. So as simple as that, we are done with the entire question. A 6-marker question solved so easily when done systematically. First, deal with the realization account, and then using the realization account and the information from the balance sheet additional information, complete the capital account and bank account in such a simple manner. So I hope it was clear to you. So thank you for joining me today. If you have any doubts, please leave it in the comment section below. And if you have not yet subscribed to the channel, please do subscribe to the channel and stay tuned for more additional knowledgeable videos.